Welcome to the FarrCast, providing you insight into Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week on the FarrCast as we cover Wall Street, Washington, and the world. It's the 30th day of January. Hey, first headline for the FarrCast today is January 2025 is over. Over. It's gone, over, and done. Can't believe it. I've just started writing 2025 on my checks. I'm probably one of 4 elderly people left who still write checks, but I've managed to get 2025 right at least twice. Okay, stocks, ladies and gentlemen, are doing okay. It's been a bit of a rough start for the year, not awful in any ways, but a lot of the big tech stocks have suffered a bit. And from this new AI deep sense thing out of China, really rocked the world of a lot of these tech companies because they came out with a really good, really big large language model that works, and they did it for a fraction of the cost being used by everybody else. Moreover, they used a fraction of the NVIDIA chips everybody else requires. 50,000, 60,000, 70,000 chips as opposed to 500,000. The cost was significantly less, and it shook up the tech world because it made investors say, hey, why are you all spending so much money to develop your AI platform when these really smart Chinese guys can do it for a tenth of the price? What's wrong with you people? Well, maybe the Chinese aren't telling the truth here. Do you think? Is it a possibility? And hey, maybe ChatGPT and everything else has been around for enough years that they could borrow a little bit of that technology and get a leg up. Prices were probably lower. They did do a couple of really interesting things in the way they train their large language model to learn. They changed some things in the algorithm and what they instructed it to do. So there are advances there. Is AI going away? Absolutely not. Is AI going to be the driver of productivity? And productivity like we haven't seen before in our lives over the next 3, 4, 5 years? Farr says absolutely yes, hands down. Don't even worry about it. I don't make predictions like that very often, ladies and gentlemen. This is a game changer. This is a game changer like the internet was a game changer. Is it going to change your life that dramatically, the way maybe an iPhone did? Yeah, perhaps, actually. Perhaps. Ways you can't quite imagine yet, but yes. Interest rates have come down. The Fed held rates steady, but over the past, 4 or 5 days, interest rates have come back down. The 10-year Treasury is now trading at a 4.49, so below 4.5%. That's a pretty good sign of strength there in the economy when that Treasury is doing that well. Oil 72. Why all the volatility in news? Well, in addition to China, we have something new. If you haven't paid attention, its name is President Trump. And President Trump likes to keep things hopping. And he's doing a really good job of keeping things hopping, and keeping people off balance is the goal. He's doing great. I actually think that there are some really good effects of what President Trump is doing. You don't have to agree with everything that President Trump does. I don't like his bombast. I just like a quieter approach. But it works for him, ladies and gentlemen, and he has world leaders responding to him in the way they're not responding to other world leaders. And finally, before I get to my wonderful friend Kenny Polcari, I talked with a CEO who was in Davos, who was in the room when President Trump spoke on the screen, and I said, what was the reaction in the room in Davos? He said, it was interesting, Michael. I've attended this before when Trump was there. And in previous years, he was just resented. He was disliked. The resentment, you could still feel it. You could still see some sneers, but more, Europe's in such disarray. There was kind of a respect. There was a bit of an admiration. They like the tough guy Trump, and a lot of them seem to wish they were the tough guy Trump. Wish they could pull off the bravado, wish they could get the effect. And the one thing that was clear, Michael, was that none of them want to be the object of President Trump's scorn. None of them wants to be the target for President Trump. So with all that in mind, we're going through earnings season. Tech earnings are out. Lots of earnings are out. And we had a horrible, horrible plane crash in Washington, D.C. overnight. An American Airlines jet, 64 people on board, collides with a military helicopter in just outside of National Airport, Reagan Airport. And it's tragic. No one has mentioned one survivor yet. It is absolutely devastating. So our prayers go there, and we move to Wall Street and what's going on. Mahaffee's coming up. Les Munson's coming up to talk about the world. We're starting with our great friend Kenny Polcari from Case Capital Advisors, Chief Market Strategist at Slatestone. Welcome back, Kenny.
Thank you, Michael. It's always a pleasure to be back.
I took too long to do that, Kenny. I'm sorry, but so much to cover this morning. What are you thinking about where we are with markets, with the new president, with earnings season, everything?
So listen, to reiterate your point, I think the market's fine. I think the market is embracing kind of what's happening in the new administration. I think the market appreciates kind of the, take no prisoners approach that he said he's going to do some things. You can already start to see that he's doing what he said he was going to do. I think the market appreciates that. And it's because the market likes clarity, right? The last thing the market likes is uncertainty. And so it likes some sense of certainty to that point. Now, do I like every single thing he says and does? Absolutely not. I don't like the fact that he's trying to tell Jay Powell what to do. It's not his business to tell Jay Powell what to do. But there are other things that he is doing, less regulation and using tariffs as a negotiating tool. And that seems to be so far fairly successful. And I think the market is telling you it's okay with that. Now, we're also in the middle of tech, big tech earnings. It just started last night with Microsoft and Meta and Tesla, right? Now, they all, Microsoft and Meta beat, Tesla missed, yet they're selling Microsoft off and they're taking the other two higher, just because I think, once again, it's the trader types that are taking Microsoft down 3% or so, just because, because Azure, their cloud computing stuff, didn't grow necessarily as fast as they wanted to. It still grew by 157%, but apparently that's not enough for the trading types.
Hey, IBM beat too. Do you see that old tech beat? Old tech IBM.
I love IBM. It's a big blue, but I think, so now we're going to get into what tech says, especially after what happened on Monday. To your point in your introduction, the whole thing about China and that deep sea model that they have. Look, I was on TV this whole week when that happened. I'm in the camp that I don't believe a thing that China says, first of all. So let's just put that out there. I don't believe what China says. I think everything they say with 10 grains of salt. That's number one. I don't see how they can have some guy in China in a one-year startup, create a better mousetrap, a better AI mousetrap using subpar NVIDIA chips at a fraction of the price. Makes no sense to me. And I think what we're seeing now in the news after is that that may not be the whole story. So, like I said, do I think AI is going away? Like you said, no, it's not going away. I think you have to be involved. I think you have to stay involved. I don't think you can have stories like that knock you off your game when you talk about AI and investing and technology.
I'm going to change on you a little bit, Kenny, and in a different tack that you and I usually haven't gone here in a couple of years. Anyway, Kenny's been on the FarrCast for all 8 years, ladies and gentlemen. I attended an investment committee meeting yesterday. We were getting a presentation from our money managers. They've done a very good job. And yet one of our committee members, who's a new committee member, by the way, it's always the new committee members that kind of tend to disrupt things. It's not bad when they do. Sometimes you just have to make sure they get back in their lane a little bit. But this guy said, what are our fees and what are our charges? Because on another board, we've moved everything to ETFs and to passive investing. And while our guys had a very good answer for that, there was a discussion that ensued among some of the committee members, none of whom are professionals in the business. And they said, listen, passive is just better. It's cheaper, it performs better, and everybody should be passive. And I interrupted and said, listen, passive and active go through our tidal. They go up and they go down, they reverse places, and each has their day. It's like growth and value. It's the international, it's the this and the that. It's the expansion and the contraction. As soon as you're ready to throw out your individual stock manager, you should probably be buying it as soon as you're ready to call it quits on passive because it's underperformed the stock guys forever. You should probably put more money in it. So whatever you're feeling and whatever you think hasn't been working for a long time, that's the last thing you should get out of. But Kenny, do you agree? And tell us about passive versus active, because you are actually a registered investment advisor and you have clients. What do you tell them about this?
So we don't. I'm with you in that case. If you're going to be passive, you're going to be someone who maybe is just starting out. You've got $5, $10, $15,000. You got to get into the market somehow. So getting in using ETFs, passive investing is going to get you started. But once you start to accumulate real wealth, then you want an asset manager, you want a wealth advisor that's taking much more interest, not only in you, but taking interest in watching your portfolio grow. And you have to be much more active. And active doesn't mean you're trading. Active does not mean you're in and out, you're buying and selling and all that.
That's a great point.
Active just means that you are selecting. Now you're doing a lot of homework. You're the analysts at this firm are doing homework. They're selecting individual names that they suspect are going to outperform in their sectors and then add value to your total portfolio. That's the difference. And that usually happens as people start to accumulate more money, 500, 600, 700 million, 2 million, 5 million. That's when that really starts to make sense. So passive investing when you're starting out is great. Having some passive investments in a portfolio when you've got 2, 3 million, that's okay as well. But you're not going to use it as your investment strategy for a person in that category. You're just not.
I'm going to disagree with you a little bit. I'm going to say that if you want to go passive and you want to stay passive, there's nothing wrong with it. If you want to own an S&P 500 index fund, an ETF, some low cost something or other, and you're really of a mindset and personality type and discipline that you'll leave it alone, that you will leave it alone and not get, trigger finger happy with moving stuff in and out. If you really leave it alone, that probably works over time. And I don't really have a problem with that. Warren Buffett has said if he didn't manage his own money, he would just probably put it in an S&P 500 index fund. We'll never see because he manages his own money. But I don't think there's a problem with it. And I particularly think that a lot of these ETFs and passive investing are great ways to get exposures in areas where you genuinely don't have the expertise to do the research on the individual names, like international stocks or mid-cap international stocks. How do you research those companies? So owning a group of them, or if it's a speculative area, if you decided that you wanted to get into emerging biotech, for instance, these are speculative companies and the diversification should offer you a great deal more protection. But anyway, when you're doing anything that's speculative, you don't want to put a lot of money in there. I can see you want to talk, and I've said
I don't disagree with you. I don't disagree with you, and that's fine. But to your point, that you have to be able to sit there and just not touch it. You can't be trigger happy. And by the way, just FYI, look at the S&P. If you just take all your money and put it in the S&P, total return index, guess what? You're actually way overweight technology, and you probably don't even realize it unless you understand what's in the S&P and how it's weighted. Because right now, the S&P is way overweight technology just because of what's happened in the space. And so you have to be
over 30% in those 7 names. You're going to have 30% of your portfolio in 7 stocks. You think you're buying a 500 stock index, which you are, but it's made up 30% now because these companies, it's a cap weighted index. So the biggest companies have the biggest share. The biggest,
right. So if you're someone who's 65 or 70 years old, that's right. But if you're 65 or 70 years old and you think you're in this, well-balanced S&P 500, you have got something to learn because you're really not. And so you have to understand that. And so that's going to be part of, if you want to be passive, that's fine. But your advisor, even using passive tech strategies, will say to you, we need to rebalance this because of the overweight of tech in the S&P sector. We need to add some of this, or we need to add other names, other sectors to balance that out, so that you're not off balance, right? You're not overweight without even realizing you're overweight.
So when you see, and give me a last word for Fred and Ethel here. I ate up too much of our time this morning, Kenny, but let's talk to Fred and Ethel, who are seeing these upsetting headlines, perhaps out of Washington. And Kenny, we've got a budget deadline in Congress, and it doesn't look like the Republicans are agreeing. And we could easily, I think, at least 50-50, have a government shutdown from what I'm hearing from the folks in Washington. People listen to all this stuff, they groan, they hate it again, and they say, what are we supposed to do? I mean, and what am I supposed? If you're 56 years old and you're thinking, this is starting to look like real money to me, and when it moves now that my portfolio is $3 million, 10%, of my portfolio is $300,000. All of a sudden, these are big moves, and they're upsetting to me. What do you tell them?
They are upsetting to you, but what I would say is when it comes to things like, the government shutdown and all that stuff, I don't let that stuff get in your way, because we go through that process all the time. It happens. They shut the government down for, a week or not, or they bring it right to the edge, and it all ends up being fine. So you need to kind of eliminate a lot of that noise. You got to make sure that you're in a well-diversified portfolio. You got to be comfortable with what you own. You got to take advantage when you need to take advantage of stocks that get dislocated because of some of these headlines. I think if you stay the course, you understand the thesis hasn't changed, then you'll be okay.
Kenny Polcari is the CEO of Case Capital Advisors, the chief market strategist for Slatestone Wealth, and pretty much the voice of Fox Business News, period. Listen to Polcari. Kenny, thanks. We're coming back with Mahaffee. Please stay with us. Okay, Harry, cut some of that, because not Dan's last line, just me giggling because I wasn't ready for it. That's really funny.
Thank you for joining us this week on the FarrCast. Now it's time for political analyst Dan Mahaffee and your host, Michael Farr.
Welcome back. Joining me now, as he does every week, Dan Mahaffee, president of the Dr. Scholl Foundation and a scholar at the Center for the Study of the Presidency and Congress, a Washington, D.C. think tank, and most important, the senior political analyst on the FarrCast. Welcome back, Dan.
Good morning, Michael. Great to be talking with you again.
Great to be talking with you again. It was great to see you in Washington last week. Almost on the grounds of the White House. We were about a block and a half away, staring over at it, visiting with some muckety mucks. It actually seemed like people were talking again in Washington this past weekend. Both sides talking to each other a bit more, or maybe it was just that the Democrats seemed to be a little more quiet, but everybody seemed to be getting along a bit. I'm a bit concerned about this debt limit and Washington spending and the vote coming up here. It doesn't look like the Republicans have the vote, Dan. Can we start there for today?
Yeah, Michael, it was great to see you. And I think one of the things that was certainly, as we were in the still post-inauguration glow in Washington last week, you felt when talking to Republicans and those in the Trump camp, as it were, very excited, very gung-ho about their plans, seeing that they had the majority was in place, the president was in place, both houses. But as you say, this is the reality of narrow majorities and trying to cop together these very complicated bills, given the very differing interests within the House of Representatives and pretty even within the Republican caucus, where you have, again, moderates from suburban type areas who want to repeal the salt tax deduction type stuff, things like that. And then you contrast that with the Freedom Caucus, who are focused solely on that debt issue, as you point out. And it's going to be extremely difficult to find something that satisfies everyone. And if this is an unsatisfying answer in some ways, Michael, but it's more of the same. Well, it is frankly more of the same, because it's largely the same Congress and same narrow majority that we had previously, even with Biden as president.
Are we going to see a government shutdown, Dan? I'm hearing 50%, 50-50 could have a government shutdown that they won't. The Democrats aren't going to come across the aisle and help out this time because Biden's not there and they don't have any reason really to do it. So they'll let the Republicans hang if the Republicans can't get it done. Does Trump big stick to swing.
Even if we saw what we saw with the OMB memo, you don't even need to get to a shutdown to have that kind of back and forth. But look, the risk of a shutdown and discussion on that, I would put it higher than 50%. If I had to say, I would say in the 75% range. And then I begin to wonder within that, is it a longer shutdown or one that is, of course, the over the weekend back open by Monday shutdown?
What's the
flavor
date
of
of that
shutdown?
deadline? What's the date of that deadline?
It looks like that date will be March 15th. So, just before St. Patrick's Day. I don't think anyone's going to be toasting with green beer just yet that week.
That's a Saturday, by the way. I'll be back in Washington that morning, and I'll be attending the Society of the Friendly Sons of St. Patrick on Monday night. Why are you having it Monday night? Well, because that's St. Patrick's Day. That's when they do it. So that's what I'll be attending. Dan, could this be the end of the Trump honeymoon then? Not quite through the first quarter where everything's coming up roses for Trump?
The Trump honeymoon, some would say the Trump honeymoon, what Trump honeymoon? We see polling now that shows he has the lowest approval of a incoming president since World War II. The other questions are some of the agenda, again, this OMB letter we talk about, and you've heard in the news, that came out even though it wasn't apparently authorized by higher ups in the White House. So the confusion caused by that, all these things of a honeymoon are being undone by some sort of self unforced errors here in rolling the policies out. On the other hand, going for these controversial issues, I think what you want to see is where does he try and reset? We now know that March 4th will be his address to Congress, like a State of the Union. What is he trying to push with his agenda? What is the plan? Because most people will say, if you're outside the Beltway, what have you seen from the administration so far? Deportations, and that's about it.
Dan, on this subject of why we can't we all get along, and perhaps the Trump honeymoon, it brings to mind this new report from the American Enterprise Institute. And the top line is, ready for this, folks? New data from the American Enterprise Institute, very thoughtful, conservative think tank. New data show an emerging gender divide among single voters, especially among college-educated singles. 73% of college-educated single women are less likely to date a Trump supporter. That compares with 44% of single women with a high school diploma or less who are less willing to date a Trump supporter. It says further that men really don't care as much about whether they will date Trump supporters, that 46% of college-educated men don't want to date Trump supporters, and 31% of single men with a high school diploma. I mean, really, politics, therefore, Dan, is going everywhere and is interfering, I guess, or dictating at least the rules of the love connections that are being made out there. And I'm especially pleased to see that the very conservative right-wing AEI is actually monitoring these very important and vital, crucial data.
Right, and it's just hard to be, dating someone who's more complicated than your traditional red-blue divide. What if you're, say, Friedman in the streets and a Fabian in the sheets? Who knows?
I'm not sure how to follow up with that, Dan. So therefore, I'm going to move to China and DeepSeek.
Yes, yeah.
Look, that could be, I guess, some sort of relationship website as well, but it's not. It's not. It's AI, it's artificial thinking. Tell us what this means from DeepSeek. I've suggested that I really don't believe the Chinese have done this for $7 million or whatever they've said.
Yeah.
I don't believe that they've been able to do it with a fraction of these NVIDIA chips. Said that with Polcari. Tell us, you lived in China, you speak Mandarin, you understand the society. Tell us what you think.
I think there's a lot of questions that still need to be answered. You've seen people online playing around now with DeepSeek, and let's even just skip past how much of your own data they can hoover up if you install this on your devices. But next, you see how it plays around. Is it really just actually secretly accessing Chat GPT, as you said with Kenny earlier, are they using these chips? We always see the numbers now that the import of these NVIDIA chips into Singapore has skyrocketed. Really, I don't think they're all just going to Singapore so that the Chinese can't announce that they're violating sanctions openly. But in the end, as a question to the people I trust on this say, it sort of shows that the Chinese are riding in the peloton on a different bike, but it's not necessarily going to be a faster bike. But maybe we'll learn more too about if there is something behind this, how our systems can run more economically. That's a benefit. And ultimately, it's a longer term lesson for policymakers. You can't just map the assumptions of your system and your tech development tree and process onto other countries and assume they're going to follow that. Our actions are going to force them to find other ways. They're going to seek different models. Some may work, some won't. But at the end of the day, it's ultimately what makes our system stronger. And I think, we still have the ecosystem of the developers, the equipment, the hardware that they don't. So yes, it's interesting to watch. I don't think this, though, has the impact that it seemed that it had on the market earlier in these weeks.
All right, so don't give this all that much credibility yet, and don't think that our entire tech universe has been undermined yet.
And ultimately understand too that yes, we'll continue to make the best of the best, but for plenty of the world, market share is going to be about providing what is a good enough solution as well.
Okay, we've seen a lot of tech leadership show up for President Trump, not Zuckerberg. He's still got a $25 million suit against him from President Trump for cutting him off of Facebook and Meta, or whatever we've got to call it these days. But looks like they're going to make up here. Everybody seems to be wanting to make up with President Trump. In this world of tech, Dan, anything we need to watch? And then I want to ask you about crypto.
Well, what I would say in tech we need to watch is, at least from the Washington side, what actually moves in terms of legislation. There are so many proposals and discussions long about what, do you break up big tech? Do you streamline? All these different discussions that never get anywhere on the Hill. And you have now a Trump White House where most of these discussions, look, tech CEOs have never had more access, as you point out, but so much of the discussion from the White House seems to be at least how Trump is able to use and see, and how the president can access social media more than what the policies and businesses are just yet. But look, privacy, the size of these firms, all these things are going to be on the radar. And I think that's why these folks want to get the president's ear and get it early.
Crypto, Dan, is something that continues to puzzle me only because it does not have any intrinsic value. Crypto, ladies and gentlemen, is worth whatever the next guy is willing to pay. If the coins, such as they are increasing in value, it means that somebody's willing to pay more for that coin than you paid. It goes to the greater fool theory in many ways. There's no intrinsic value. What does it mean? It means that there is no there. There's no promise that it's backed by the good faith and credit of the United States. It's not backed by anybody other than the next guy willing to pay. Why is President Trump moving really so deliberately into this space of cryptocurrencies, and what does it mean to you?
I think it shows that he just generally, I rather than any specifics of crypto, I see this as just part of a two-parted one, generally rewarding those who have been loyal to him, and the crypto community stood with him during his time out of office, particularly as the Biden administration sought to regulate it more, which segues into point two, which is just part of a greater deregulation of the financial industry. And regardless of whether crypto has an intrinsic value or not, it's now seen as something that the administration can take the shackles off, as it were, and allow this industry to flourish. And I think there are these things where you have certainly speculation in these coins and memes and some of these ones that you can't even say at the dinner table type products. But then you have the questions of what's this underlying technology going to do? What is the record keeping? What is the transaction costs that are lowered? How does this all fit into a technology base that will also be important for the future, despite the speculation you have on specific crypto coins? So I see it as a stay tuned an area, and one where look, I think you caution people about the Wild West nature of it when you're looking at it in terms of finance, but as an underlying technology base, there's a lot of potential yet to be tapped and understood.
Final quick word, please, on Israel. We're going to ask Les Munson when he comes on about Israel and Netanyahu's upcoming trip to the U.S. What's going on? Can Netanyahu actually hold up against his right wing and keep this ceasefire going, or how long till they start shooting again?
Yeah, arguably within Israeli politics itself, there are centrists who would support the government. It sounds that if the right wing moved out over the ceasefire, the question is, I think, for Netanyahu, as we've said previously, how much of this is a ceasefire and how much of this is just buying time for round two so that the Israeli army can restock its munitions, the reservists can rest, and there's a more friendly White House behind them. I think it's the latter. But while peace holds, ultimately, let's be heartened that people are coming home to their families, many of who thought they would never see each other again.
Dan Mahaffee, senior political analyst on the FarrCast. Thank you very much, Dan. We'll see you next week. Coming up, ladies and gentlemen, Les Munson, a FarrCast fan fave. We're going to figure out what he's thinking about the international political scene and also what's going on in Washington. He's an insider's insider. When we come back on the FarrCast.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. Thank you for joining us on the FarrCast. And now, back to your host, Michael Farr.
Welcome back to the FarrCast. I am Michael Farr. As we began at the beginning of today's show, our hearts and prayers are with all of those families and friends from the plane crash in Washington, D.C. We have not heard of a single survivor. Tragic incident. We hear about these every couple of years. This one hits particularly close to home because it's my home. It's where I was born in Washington, D.C. I can't tell you the hundreds and hundreds of times I've flown in and out of that precise runway from that precise approach. And it's absolutely chilling how quickly things can go wrong, and did. So we're saying our prayers for those folks and this tragedy. When we are trying to figure out the world, Wall Street, Washington, and the world, we have few better people to talk to than Les Munson. Les Munson, co-head of the international practice at BGR Group. It's a government relations firm in Washington, D.C. He does a lot of consulting for foreign governments around the world, in South America, Middle East, Europe, Latin America. So Les is the guy. He was in and out of government. He's got an amazing bio. Hey, Les, welcome back.
Thanks, Michael. Awesome to be with you as always.
Les, it's been an interesting time in Washington, D.C., and indeed around the world. I said at the beginning, where I got much too long-winded, according to Polcari. He said, damn, you talked a long time this morning. I did, ladies and gentlemen, and I apologize, but I had a lot to say, I think. I don't know. Hope it was helpful. I mentioned that I talked to a CEO who was in Davos, and he said the reaction to Trump was different this year. There was almost a bit of an admiration for this tough guy and a bit of jealousy to want to be a little tougher themselves, to be able to draw those hard lines, to be able to muster some of that bombast. And half of it, he suggested, was because Europe really seems to be in a bit of turmoil economically, at least, and without a clear leader in the European Union, he's the loudest voice in the room, and he's getting away with a lot, and no one wanted to be the object of Donald Trump's scorn. Nobody wanted to raise the first one out of the hole and be the whack-a-mole target. They all kind of scared of him. Is that consistent with what you're seeing and what you're hearing? What would you say to that? And how long does this honeymoon period for President Trump last?
Michael, I have no idea. It could be the next 5 minutes. It could be the rest of his term. It's a great question. I think what you're absolutely put your finger on a really interesting aspect here, that Trump came back into office at a time when there was a real dearth of effective leadership in the Western world. And with all due respect to former President Biden, he wasn't providing it. You also see weak governments in the UK, in France, in Germany, in Japan, in Korea, kind of across the board among liberal democracies. There's been governments that have been struggling to lead their own countries. So Trump comes back into office, this really remarkable comeback, whatever you think of him, to come back from a first term that had a lot of ups and downs, and maybe more downs at the end, from an assassination attempt. This comeback is truly a remarkable American story. He comes back in more popular than he's ever been, and has this opportunity to put together coalitions to do things in the world that is certainly not anything we've seen for 2 or 3 decades. This is a real unique moment, and he seems to be recognizing that, and he's doing interesting things on the world stage. We all expected he'd be tough on China. Instead, he's reaching out a hand to Xi Jinping to say, let's talk about stuff and see if we can work something out. Everyone expected him to go easy on Putin. Instead, he's making threats about the way Russia conducts itself in Ukraine. In the Middle East, he is, before he even got into office, he helped push forward this ceasefire and hostage exchange deal that is an opportunity for a better outcome there. So a bunch of changes, a bunch of kind of surprising developments, and he does seem to be, for lack of a better term, the man for the moment. And here we are.
I asked Mahaffee, this continuing resolution to keep the government funded ends on March 15th. It doesn't look like the Republicans agree. Looks like there's a good deal of infighting. I suggested at least 50-50 the government shuts down. Mahaffee thinks it's higher than that. What do you think the percentage chance is that the government shuts down? And if it does, could that be the setting sun on the Trump honeymoon?
I don't think we're looking at a government-wide shutdown. I suppose it's possible there could be like a modified or partial shutdown. And by the way, we're still eons away from March 15th. If the Republicans weren't disagreeing with each other, something would be wrong. They'll come together on about March 14th with a plan that unifies them all. They really need that deadline to kind of push them together. They are like herding cats. That is a feature, not a bug, of the Republican Party.
Less economic data just came across that shows that the GDP in the U.S. grew at 2.3%. 2.3% in the fourth quarter. That was against estimates of 2.5%. And that for the full year, it was up 2.8% compared to 2.9% for 2023. So this looks like decent data. Is this going to change any of the dialogue or positioning out of the Trump administration?
I think Trump is going to take credit for the good news, and he's going to blame somebody else for the bad news. That's what he does with the stock market. That's what he's going to do with the economy. That's what he's going to do with respect to the Fed and interest rates. And he's a day trader on all of this data and how it will benefit him. He is about using these things to give himself political strength. So I think there'll be a lot of. He's an excellent communicator in his way. So he will tweet. He will social truth. He will do the things necessary to claim credit when something good happens. And if those numbers are good, he's going to claim credit for them.
I want to jump to China and then to Israel, please. I guess the first time I heard that the president was made of Teflon was Reagan, that the bad stuff just never stuck to him. Bad stuff is a euphemism. Okay, China, where they have bad stuff too. And we've seen DeepSeek, but we've seen a whole bunch of stuff. Mahaffee says, don't believe the Chinese. And by the way, Singapore has been buying up every NVIDIA chip in the world, and there's no way they're using that many of them. He thinks they're just channeling straight over to China. What do you think, first of all, about this DeepSeek thing, if you have an opinion? And then secondly, is Xi Jinping changing his tune, and how much will these conversations with Trump help or hurt?
Well, let's remember in the first term, Trump was similarly trying to do a deal with China, a big trade deal, and it never really panned out. And the two sides didn't really trust each other. And then COVID happened and things turned very sour. Short story there. I think this time, I do expect him to do similar. The big thing on the table for Trump, and he's a deal maker and he fancies himself a deal maker, and occasionally he's quite good at it. He wants to do the big deal with Xi Jinping. So I expect he will pursue that. And if the two sides can actually agree with each other on something, maybe it happens. As Mahaffee points out, and he's 100% correct, there's not a lot of truth coming from the other side. So what do you base this on? On the AI question, I think I'm not going to make any judgments until we know a lot more. I think there's a lot of folks became experts in a few hours on what AIs are working and working well and how the chips worked. And I don't pretend to understand the engineering behind all of that. So I'm gonna kind of wait and see how that shakes out over the next couple of weeks. But I think the big issue for the U.S. government and for the Republican Party is going to be, can Trump keep the party together while he pursues this deal with Xi Jinping? There's a lot of people in the party highly skeptical of China and any kind of arrangement with them. Is he going to be able to do that? It's a huge question. And if he sees that he's losing political support among his guys in the Congress, will he move off of this deal making and have a much more adversarial approach to China? That seems more likely to me.
And finally, Netanyahu's coming to Washington. Mr. Smith cometh. Mahaffee has referred to Netanyahu as one of the most successful American politicians of our era. What do you think?
He's pretty good. I've seen him in action. He's held this together for a long time. He's been in the spotlight for a couple decades and has endured a lot of ups and downs. Talk about the comeback kid. He's had a couple of them. He's in many ways Israel's Trump. They're not super happy with each other at the moment because they've had some disagreements about American politics, but they may work that out in the next few days for this visit. And I think people have always underestimated Netanyahu. The last administration, the lowest common denominator for the folks in the Democratic Party was kind of this deep skepticism of Netanyahu, almost hostility towards him.
Yeah.
In fact, it was hostility towards him personally, which is a crazy thing to do in international affairs. That's not how you conduct relationships between countries. It should not be personality based. It has to be interest based. And if Trump can return to that, which I think is the sensible thing for both the U.S. and Israel, things are going to be much better in that region.
Mahaffee says that this current ceasefire is not so much a path to peace as it is a pause to reload. Do you agree with that somewhat cynical, albeit probably realistic view?
Yeah, basically I do. It's the Middle East will always disappoint if you're hoping for goodness and light and you have a utopian vision for people holding hands and getting along. Probably not going to happen.
When you come back, I want to talk about what's going on in Central America. I also want to hear about Iran. We're out of time now, but Iran seems to have moved off the radar screen for now, and I never think they should have. So next time, can we talk about some more of those things?
Whatever you want, Michael.
Yeah, you're the best, Les. Thanks so much for being with us. Ladies and gentlemen, that's it for another FarrCast as we cover Wall Street, Washington, and the world, bringing you insiders to help us better understand the world in which we live and invest. Hope it helps for everybody at Hightower Advisors and Farr Miller in Washington, my producer, Harry Jennings, and certainly for myself Thank you so much for listening. Please share us on social media. We'll be back again next week, do it all again, and cover Wall Street, Washington, and the world. I'm grateful to each one of you. I'm Michael Farr. See you next week.
And that's it for this week's episode of the FarrCast. Thanks for being with us, and thanks to our guests, Kenny Polcari, Dan Mahaffee, and special guest from the BGR Group, Lester Munson. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. Please be aware that any time we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. And if we can be of help, please reach out to me at hjennings@farrmiller.com, and I'll be happy to put you in touch with one of our investment professionals here at Farr Miller in Washington to help you navigate your financial course. We are grateful for all of your notes and comments, and we try to respond to as many as we can. Please keep those emails and messages coming. Take care, stay safe, and stay healthy. We'll be back with you next week on the FarrCast. Wall Street, Washington, and the world. Farr Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, and a SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr Miller in Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller in Washington and Hightower Advisors, LLC, and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr Miller in Washington and Hightower Advisors, LLC, and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC, or any of its affiliates. Farr Miller in Washington and Hightower Advisors, LLC, or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and/or legal advisors for related questions.